You talked about the Howard Marks book, talking about the cycle. Mark says we are currently not in a bubble. This seems at odds with the data. I don't know if we've been calling it a bubble necessarily.
You don't have to be. So please don't get, don't. It sounds like you're a new subscriber. That's not how we would care. We don't care. If somebody classifies it as bubble or not a bubble, it doesn't matter. We're just rate of change people, data driven, apolitical. Again, not Republican, not a Canadian, but I am a Patriots fan. Okay, but that's not in the model, the Patriots stuff. That's just winning, hashtag. At the end of the day, it's just, you don't have to make calls like that. It doesn't have to be. We actually were the most bearish going from the most bullish on Wall Street in September on US growth stocks without a recession call. Right? We said this how many times? But if I wanted to get really famous, like on Old Wall TV, I would have yelled to the heavens that Bitcoin's going to 100,000, or on the other side that we're going into a recession. Wouldn't my call have made more news as opposed to making more sense? So again, just check that stuff at the door. If Howard Marks is your Baptist when it comes to calling bubbles, that's cool. But there's nothing to say that there's no bubble in high yield credit. Corporate credit's at the biggest level in the history of bubbles. Slide 7D. This is just actually a bubble. Like all of them are bubbles because they're dots that we make like bubbles. So we'll show you what we would get, like a more appropriate way to talk about bubbles. I think is going to flip ahead a couple, guys. Start flipping. Right there you go. See, these are bubbles. These are bubbles. Let's bubble, bubble, bubble. All right. Bubble trouble. Little bubbles, big bubbles. All right. So these are all bubbles. So the bubble, the size of the bubble. You see the size of the circle is calibrated for the size of corporate credit outstanding as a percentage of GDP. Okay. So that sucker's the biggest in the history of the U.S. or when Howard Marks or anybody for that matter could be characterizing the size of an issue. This is unequivocally, in every year is a bubble. This is just one of the bigger bubbles. Okay. So as the volatility, the way to read this is effectively on the x-axis is bond market volatility. On the y-axis we have high yield spreads. So again, on the high-axis, high yield credit index, yield to worst, basis point spread over 10-year treasuries, okay? So as this goes this way, stuff blows up. As this goes this way, Powell goes dovish. But it doesn't change the fact that the horse has left the barn, okay? Why do you have the biggest bubble in US corporate history, corporate credit? Well, you have the all-time lows in credit spreads, pretty much the lowest level of interest rates or close to it, and access to capital is the more important point. And you have the all-time high in year-over-year earnings growth, fully loaded with tax reform. So again, that's why people felt safe putting leverage upon leverage upon leverage. It's a bubble, okay? Does it make you feel better about our call? I don't know.